In today's video, I want to show you a tricky trade that was made in the British pound against the Japanese yen, which tends to be a dangerous pair to trade due to its crazy volatility and aggressive personality. I will carefully explain the analysis you see on the chart, so you can understand the motivations for the trade I opened and also for the trade that I didn't open, which is very important as well. In number 1, we can see a massive fractal bar pointing up. Notice how the volatility in this candle is much higher than the previous candles. This might be a news announcement, or it might be a huge amount of money being dumped in the market by large traders. At this point, it doesn't matter which one of these is true since there is little context to articulate a trade idea. In number 2, we can see a subtle fractal bar pointing down with low volatility after a wide volatility bar going up. Surely enough, price begins its trajectory down after the fractal bar. In number 3, we see the market going down in the minor flow and creating a minor low that later will be broken by the movement marked in number 4. In number 5 things start to get a little bit more interesting. Notice how price reacts to the horizontal line marked in 3 as a support line, not a resistance line. We can see that by noticing how the candle tails in number 5 touch the horizontal line 4 times and fail to break it down. This is an indication that the apparent minor flow of the market identified in number 4 is a deceptive one. This notion is confirmed in number 6, when price breaks up the high that originated the minor price vector that created the movement number 4. In number 7, we can see the market creating a new major high, confirming the low marked in 4 as a major low. Number 7 is also a high volatility fractal bar pointing down. If we look at the candle in number 7 without the prior context, we can easily try to open a sell trade at the open of candle number 8. However, that is not a good idea because of the context we have built so far. There are not enough reasons to go short in this market other than the fractal bar in number 7. Beyond that, the open of candle number 8, which could be our entry point for a sell trade after the fractal bar in 7 is too close to the horizontal line that comes out of 3, which marks the level in which the minor downward flow shifted up to confirm the low number 4 as solid market structure after price broke the high marked in 2. Up to this point we have a good idea that the market might give us a buy trade opportunity due to its major flow upward sentiment. Notice that in this chart we also have 4 golden lines drawn. The first golden line goes from number 2 to number 7. This is a useful line to draw to capture the angle of the market. We can extrapolate this line respecting the same angle to the market structure marked in 4. These two lines start to create the idea of a buy trade because lower golden line intersects with the horizontal line out of number 3 in a price level where there is the potential to place a tight stop-loss order and a lot of headroom for a large take profit. The two downward golden lines come from the market vector between 2 and 4. The downward golden line that comes out of number 7 is an exact replica of the line between 2 and 4. This line that comes out of 7 also points to the same price level as the upward golden line coming out of 4 and the horizontal blue line coming out of 3. The open buy trade you see on this chart has its context solidified after the candle that happened right before number 9. Notice how violently price came down to the level we have been observing. This is a reverse psychology technique of market makers because it's very hard to open a buy position after two massive candles down like in number 7 and number 8. However, we have a strong context to open a buy position. The final nail in the coffin for this buy trade is the candle right before number 9. Look closely and see what happened here. Price touched the level in which all of our lines intersect and then the market creates a low volatility inside candle. This can be interpreted as an indication that we indeed have strong buyers at this point, and these strong buyers are powerful enough to stop those two massive downward candles. A more aggressive approach would be to place a buy limit order at the intersection between line 3 and line 4, but in this case, we waited for an extra layer of confirmation. This is as close as it gets to a perfect market context. We also have a very good place to put a stop-loss order, which is a few pips below the solid market structure in number 4. That's because number 4 is the absolute origin of the market vector between 4 and 7, and the undeniable reference point to the major flow going up. We have a 25 pip stop-loss, which is kind of intimidating in the pound-yen pair. For this trade to be reliable, we need at least a 75 pip target. The 75 pip take profit level is the minimum target for this trade. However, by the magnitude of the major flow of this market, we probably have enough head room to go that high. Ideally, we can let the market rise nicely and wait for some sort of indication that momentum is running out, and then place our target order inside divergent territory. Let's see how the market develops. Here we can see that the market went up steadily and it is now creating a simple reversal divergence, as you can observe in the relative strength index. Our target order is inside the divergent territory marked by the orange box in the top of the chart. Before some of you get turned off by the use of a technical indicator like the relative strength index, let me remind you that certain indicators can be extremely useful in certain situations like this. It all depends on the context. In fact, there is the possibility of finding new price action patterns by taking the analysis of momentum indicators to an extreme, which is ironic to say the least, but indeed possible, like we do in the fractal flow strategy. Let me also say that this initial negative response to certain ideas like divergence have a name, and it's called Semmelweis reflex, which we will cover in the fractal flow strategy video course. Here we can see that our trade hit its target with an 85 pip profit on the 5-minute chart, which can be considered a huge trade given the relative temporal proportions. If you want to understand how to trade like this, check out our strategy store in the video description. I hope you have been able to see the contextual construction to this trade, and the ideas that led to its success. Don't forget to subscribe to our channel and leave your feedback below. Thank you for watching.